to the presentation on value-add remittances services. My name is Xavier Martin, and I'm Deputy Director at the Digital Frontiers Institute. And I will be moderating this session this afternoon. I have the pleasure of introducing Maurice Iwunze, a person that knows a lot about remittances and the links between senders and receivers. Maurice is the co-founder and CEO of SympliFi, a fintech startup specialized on providing digital credit backed by remittances. Those of you joining us in the audience today, you will have some time at the end of the presentation for your questions and comments. So please do participate by writing them in the chat. In fact, you can start already now to put your questions. And without further ado, I think that we can start by seeing the presentation, and then we can properly welcome Maurice and have a conversation with him. Thank you, everybody, for joining.
Hello, my name is Maurice Iwunze, and I'm the CEO and co-founder of SympliFi. We're a UK-based fintech company focused on enabling access to cross-border credit. So before we start off with the presentation, I always like to start with a brief story. So I'm not only just a co-founder of SympliFi, I'm also a user of the product. On the screen here is a picture of a relative of mine in Nigeria named Michael. Now, earlier this year, Michael called and asked me to send him $75 to help him fix his car in Nigeria. Now, instead of sending him that money, I used SympliFi to help him secure his first ever loan from a bank in Nigeria within 24 hours. And now Michael is starting to understand the value of credit and is able to access it a lot easier. So he's now on his third loan with that same bank to grow his small drive-in business. Now, I could have just sent him that $75 when he initially asked for it, but instead I've used SympliFi to put him in a position where he may never have to ask for money ever again. And that's the transformational opportunity that we're unlocking at SympliFi. So like Michael, there's nearly 2 billion people in developing countries that struggle to access basic credit products. So, and as a result, whenever they're short on cash, they have no choice but to depend on their family members living abroad to constantly send them money to fill their cash needs. Now, the problem with this model is that for the millions of immigrants in Europe and the US that are constantly sending this money, this constant drain on their limited finances keeps them in poor financial health. And their family members back home that are now dependent on this money continue to be excluded from formal financial services and also remain in poor financial health. And this problem persists because everyone in the remittance market is focused on just trying to help people like my mother in the US send money back to Nigeria cheaper, instead of solving her underlying problem, which is eliminating the need for her to have to send money at all by solving the access to credit problem. And we're the first to solve this massive problem at SympliFi. So what we do at SympliFi is that we enable people like my mother to help her family members back home in Nigeria instantly access credit instead of sending money. And we actually do it through a process that's simpler than sending money. So how it works, the money that my mother would normally send, she tops it up in her simplified digital wallet. She agrees for us to hold that money in her wallet. And then her family members back in Nigeria can use it as collateral to instantly access loans from our bank partners in Nigeria anytime they need cash. And the money that sits in her SympliFi wallet, we pay her a little bit of interest on it. So there's no cross-border transfers. She gets to keep her money, and she actually makes money from helping her family members back home start learning to access money on their own and building valuable credit history. So our model to acquire customers is we have a dual distribution channel to acquire our customers. We have a B2C model in which any immigrant consumer starting in Europe can download our mobile app and start transacting. They can access credit for themselves or their family members right on the SympliFi app. And then we've now started to build out our B2B distribution channel, in which we're providing our solution as an embedded solution to partners. So how we've done that is by developing APIs and a white label version of our platform to enable any lending partner or any digital platform provider to be able to integrate our solution into their infrastructure so they can offer new credit products or use it as a credit enhancement solution for their existing products to offer to their customer base. And the value proposition around this model is that it enables our partners to help us drive loan demand to our platform without the extensive customer acquisition costs. Our first example of a white label solution for banks is one that we did with our partner Iwunze Microfinance Bank in Nigeria. They recently launched a secured loan product called Easy Life Loan that enables their customers to be able to access a loan from Iwunze with a guarantee from their family members living abroad. So on the front customer-facing side of the product, it's completely branded as Iwunze. It's their loan product. And then we sit in the back end to process the collateral on behalf of Iwunze. So we're really at the very beginning stages of building the first ever digital cross-border credit platform for retail customers. We started by enabling immigrants to help their loved ones back home instantly access credit. And the next big step for us is to enable that same customer base to also access credit for themselves back in their home country for their personal and business needs back home, all with the mission of enabling any immigrant anywhere in the world to be able to access credit in the places they need it the most, where they live and where they're from. From a digital collateral perspective, our first step was to enable our customers to leverage their hard currency, pounds and dollars, as collateral to be able to borrow, to be able to utilize it as collateral for credit in their home countries. And as a next step, we're going to enable our customers to be able to buy and utilize interest earning cryptocurrencies as collateral in their SympliFi wallet for access to credit in their home country, all with the value proposition of enabling our customer base to be able to earn and save while enabling access to credit in their home countries. If you would like to find out more about SympliFi, you can visit our website at www.simplify.co, and happy to answer any questions you may have.
Thank you so much, Maurice, for this interesting presentation, knowing a little bit more about SympliFi and all the great work that you are doing. So on your presentation, we have learned a little bit about the motivation, how you decide with your co-founder to start this idea and make this idea a reality, no? So let me open the conversation with a very basic question, no? So tell me a little bit how the journey has been so far, no? So we have seen how you decide to start, what was the goal that you want to achieve. So what the results have been so far, how the journey has gone.
All right, sorry about that. So first, thank you for having me at the summit. I'm really excited to be here. I appreciate the invite. And so the journey, I was joking with my co-founder that we probably would have had an easier time just trying to build a remittance company that sent money cheaper and faster, because we're the first to ever do anything like this in the world. And so, we've really been doing the hard and dirty work of really trying to build a foundation of what we think is going to be a multi-billion-dollar business category within the remittance space in the next couple of years. And so trying to build something from scratch that doesn't exist in the world today is a really, really heavy lift, and it's extremely challenging. And then you add to it the different layers of, cross-border connectivity, regulations, or being in the financial services space, and having to manage those regulatory considerations across borders and trying to integrate partners and different parts of the value chain across borders has frankly been it's been super challenging. But the reward is that few people get to build something that doesn't exist in the world today. So the first really 12 to 15 months of our journey, and still ongoing, has been around piloting and iterating to make sure that we're building a product that that's adding a lot of value and is easy to use for all our partners. In the past 15 months while we've been operating, you know, I think we've originated over, I think we're approaching about $6 million plus dollars of loans on our platform. We're now up to about 1,500 users on the platform as well, and we've seen thousands of loan requests come through our platform.
And it's very interesting that you are talking, Maurice, about this challenge of interoperability between different platforms, different providers. No, we were talking quite a lot about this morning on some other of the sessions that we had this morning. And I'm curious to know a little bit more about on your space, no, that you are working with working migrants that not necessarily are used to digital financial services. No, how that has been a challenge, no? Because we have seen that in remittances, the uptake of digital solutions is being a little bit slower than we have seen in other sectors. No, still most of migrants prefer to send their remittances through agents in cash locations. No, and is still, even now with COVID and all that, no, the immense majority of senders still use cash solutions. So how that impact your business model?
Yeah, so that's spot on, is absolutely accurate. I would even say that, you know, when we're out on the streets in London talking to potential customers, you see them go into other people to ask them to transfer money for them on the ones that do use mobile apps, right? And so people that are using mobile apps, other people are going to them like, hey, could you use your app to or your GT Bank app to send money to my account? And so, you know, it's really eye-opening seeing that in person, and you see the ad, you know, it's slowly trending, but it's not there yet, right? So that's definitely a challenge that we face as well, because, you know, there's another layer to it where it's we don't, you know, it's not only are we digital, we're offering a new digital solution. And so what we've been really obsessed with at SympliFi is making the product as easy as possible for our customer, the person that's providing the collateral for the loan. And so we obsess about, you know, how can we make it even simpler than sending money? That's one. And then the other thing we have spent time obsessing about is how do we incentivize people that we know are not necessarily digitally and financially sophisticated for the most part. How do we incentivize them to want to do the product, right? So one is around simplicity. The second one is around incentives. So we're the only company in the space where we actually offer, where our customers actually make money when they transact with us, right? And so we try to build on that business model and add additional layers of incentive. So customers are not using us out of a, you know, I need to send money back home. Customers are using us almost like because they feel they have a vested interest and want to transact, because it provides a dual purpose for them. It solves their financial needs back home, but they also make money from transacting with us.
Can you elaborate a little bit more about how that works, no? How they make money by working with you, the sender?
Yeah, absolutely. So, we wouldn't call, so for our model, this gets confusing. So yes, they're the traditional sender, but they're not sending. And how they make money from us is because they're not sending. So the money that they would normally send, they hold it in their SympliFi wallet here in the UK or Europe or US. And because they're holding and locking their funds with us, that's being used as collateral, because it's being held with us, it basically turns into a fixed deposit savings amount for them. So if we're holding your money for 6 months, for a 3-month, 6-month tenor loan, we're going to pay you interest for locking your money up with us, right? So you generate, we're not a bank, so we can't pay interest, but you generate yield in the form of cash rewards that you earn from holding your money. And so our long-term goal around that is how do we boost the yield that we provide to our customers, so now they're actually making attractive returns from helping their family members, right? And so that's the next step of what we're working on in SympliFi.
It's great, Maurice, because we are always in this space of remittances, we are talking about how to add value, no? And I think in your case, it's a clear example, no, of more transformative financial product that goes beyond sending the money, no, really accessing a loan, no, to really do other things, and in this creative system that you have put together is really impressive. So as you were saying, there are not too many other initiatives that at least I'm aware on that scheme. Yeah. So tell us, Maurice, how is working in terms of this loan? So I assume that in most cases, no, there is a strong relationship between what we traditionally say the sender and the receiver. In this case, the person taking the loan in the receiving end, and the person backing that loan on the market, the sending and the sending side. Yeah. So how is working? No, are the receivers paying back these loans so far?
Yeah, the receivers are paying back, and that's what I talked in the beginning of my presentation around my example. 3 loans paid back early. Actually, my family member paid all his loans back early. So a significant, a vast majority of our borrowers repay the loan. So kind of 2 ways. So there's multiple ways we help address that. One is we had higher default rates in the beginning. And I think it was a combination of lack of education around the product. People thought, oh, I'm taking this loan and my family member will pay it back, right? And so we had to do a lot more explicit education and communication around that. 2, we implemented mandatory credit checks, just a credit screen to ensure the person that's taking out the loan isn't over indebted or is in default with an existing lender. And then we also added automated collection tools in our platform for our bank partners. So if a borrower misses a loan payment, SMS notifications are automatically sent to the guarantor, and then peer pressure starts kicking in. And we noticed since that last implementation, that last tool, we saw default rates go down significantly. And then the other thing we try to do just around the product position, we try to promote, or we actively promote our product for productive uses. So, helping your family member with short-term liquidity needs, helping your family members get finance their business activities. So trying to angle it as a way to provide credit to people who have income generating activities, but like most people in the world are short on cash from time to time, right? And so that's really how we try to position the product to be used. So we have a couple interesting cases which I don't think is necessarily bad, but we had a customer who's providing a loan for his elderly mother. And, we didn't realize it until she struggled to open up an account with our banking partner. And the bank had to call her and help her, walk her through opening up an online account. And, but for that particular person, he wanted his mother to have basically access to a line of credit in the event there's an emergency and he's not able to quickly send money, right? And then he was going to pay off the loan if she ever drew down on it. And so we think that's an interesting use case as well.
Maurice, let me stop with my questions now, because we want to be sure to involve the audience here too. And I see that there are some questions there that I would like to address. So let's go to some of the questions from the chat. I see that you were talking before about some of the limitations that you have in terms of regulation for paying interest. And we have one question from Sonia that want to know a little bit more about that, no? About what would you need in terms of regulation to support your business, no? What are the things that you need from the regulator?
Yeah, so we went through an extensive review process with the UK financial regulator, and so 8-month process, really, again, because no one has done this. And so, you know, at the core of our business model, we're just a technology infrastructure that facilitates transactions. So all the actual transacting, it's done by our licensed partners. So the loan is issued by a regulated bank, and then our payment gateway and custodian services are done through our infrastructure provider, and so we're licensed under, so we sit under their licenses. But what we need to do, you know, I think at some point we will get our own licenses, not really for our core product, but really around if we may want to have more control around our customers' deposits, right, or the funds being held. So, for example, we want to be able to pay them interest, right, and be able to call it interest. And so, so I think those are the type of licenses that we'll look to do. So, you know, maybe because I come from a financial services background, like I actually think regulation, it's a good thing. It's a positive thing. It sends the right signals. And so part of our roadmap is what do we need to do to get any regulatory assurances for our stakeholders to make them and the broader regulatory ecosystem comfortable with our business model.
I see here another question about the challenge of offering digital credit in countries where there is no national ID system. How challenging that has been for you?
Yeah, so we haven't encountered that yet, because in the countries that we operate in, but that's not been the case. But again, we only work with regulated bank partners, and the good thing about working with bank partners is that they already know how to manage the KYC challenges of that country. And so, we basically ride on their.
This part is outsourced somehow already.
Exactly.
And finally, we have here another question from Florian that want to know a little bit more about what are your plans and challenges regarding expansion to different jurisdictions.
Yeah, so it's a very good question. We have a new, so I think in the presentation we talked about our B2B embedded strategy. I think that's going to really be at the heart of how we expand our solution and scale across geographies. And so we're having really interesting conversations with partners around the world, as far as Central Asia, that are like, hey, love this product, can I embed it into my core banking system to use as collateral? And so we see that similar to what imagine like Klarna and Affirm, pay a checkout. We envision SympliFi being an embedded feature that any partner, not necessarily even a bank, we're talking to e-commerce companies, can embed into their platform to enable their customers to utilize our solution as a collateral option. And then also around distribution partners, instead of us going country to country, bank to bank, if we can integrate into wallets and wallet aggregators, that's an opportunity for us to scale faster. And then we're increasingly looking at DeFi lending models as a solution for some of our corridors, where we can enable P2P lending in addition to banking intermediaries.
Unfortunately, we are just about of time for this session. So Maurice, it has been great to have you with us, sharing your insights, your experience with SympliFi. So we look forward, as always, to having the chance to work with you again in the future.
My pleasure. Thank you for having me.
Perfect. And the audience, thank you for your attention, for your questions. And I'm looking forward to the rest of the summit. And I hope to see you here too. So goodbye for now.
Bye.